And I'm absolutely delighted that we now have Jay Shambaugh, the newly confirmed, not appointed, you were appointed earlier, but newly confirmed Undersecretary for International Affairs at the US Treasury with us. Obviously, Jay was nominated by President Biden, Joe Biden, already at the beginning of last year. You were part of the transition team. You have worked in the Obama administration. I see you've got an esteemed career in academia, which impresses me a lot because I'm an economist by background as well. We're the best qualified individuals to talk about public policy, at least between the two of us. So I think that's very good. I'm delighted you're with us, and to round off this two-day conference with some perspectives from the US and the transatlantic relationship. Jay, thank you so much for making the time and for being with us here today.
Well, thank you, Nick, for the introduction and also for the invitation to speak with you here today. The United States and Europe face many common challenges. So first and foremost, we're dealing with Russia's unjustified and immoral invasion of Ukraine, as well as the spillovers that is causing across the globe. We're also dealing still, in some sense, with recovery coming out of the pandemic. We're dealing with global monetary tightening, presenting some new trials for us, as well as the persistent ongoing challenges that come from climate change. And so I think as we meet these challenges, as well as, frankly, some unknown ones that could be on the horizon, it's crucial that our financial system is strong and flexible enough to respond to the changing needs and also resilient enough to withstand any kind of disruption that we might face. There's really a deep connection, I think, between maintaining an open and stable financial system and the task of securing our shared values and our common prosperity. So the financial system needs to be flexible so it can effectively channel funds from borrowers to savers to borrowers. It needs to be resilient so it can provide those kind of crucial liquidity and maturity transformation services without ever kind of tilting towards runs or crises. It needs to be clear and transparent so that consumers and investors can participate in that system in a fair and safe manner. And it needs to be stable because it needs to be able to act as this crucial intermediary for payments. So the financial system should also bolster our important societal goals, whether that's upholding human rights, improving financial inclusion and equity, or for that matter, addressing climate change. The rapid growth over the last few years in financial technology and innovation has profound implications for many of these values and that are central to both our economic system and our democratic societies. And as policymakers, I think it's our job to set the rules of the road that foster responsible and equitable financial innovation so innovators can experiment, take risks, develop products and services that bring value to our economies and our consumers, while making sure that innovation does not cause harm. Innovation can't simply be a way around regulation. It has to, in fact, be something that enhances the functioning of the financial system. And the innovation and the regulatory changes that it may generate can't happen in a vacuum, though. And that's because our financial systems are so interlinked that you can't just think about this from the perspective of one country. So as such, our international cooperation among the US and our allies is really essential. And close coordination with our European colleagues on our shared vision and values really is a hallmark of the strong US-European relationship. We have frequent exchanges with the European Commission, with the European Central Bank, with European regulators, as well as with member states. We work in the G7, in the G20, in the Financial Stability Board, as well as in the Financial Action Task Force, just to name a few. And just this week, actually, we here at Treasury have hosted our European colleagues for the biannual US-EU Financial Regulatory Forum. And so today what I want to focus on is three areas: digital assets, payment systems, and cybersecurity and operational resilience. And the presentation over the last couple of days with our European colleagues here, have really emphasized the fact that these are priorities to European policymakers and industry alike, and they are also areas that are really important to us in the United States. So if we start with digital assets, I think it's clear that the market for digital assets and their use cases has just really exploded over the last few years. In September, Treasury delivered to President Biden our first ever comprehensive framework for the responsible development of digital assets, and we're continuing to carry out efforts articulated in that framework. So first and foremost, we're seeking to reduce the meaningful risks that digital assets could pose for consumers and investors and businesses. Over the past few months, we've seen consumers who have trusted crypto firms with their money, sometimes their entire life savings, and left with nothing as a result of gross negligence or, in some cases, outright fraud. Our regulatory and law enforcement agencies here in the United States are tuned into the digital asset space and aggressively investigating and enforcing against malfeasance. Our work here is part of a larger effort to make the financial system safer and fairer for everyone. Now, second, maintaining financial stability is one of our core priorities. And so while recent bouts of turmoil have shown us that there's been limited spillovers to the broader financial system to date, there are potential transmission channels, and those transmission channels for stress could quickly become more significant if internet connections between the digital asset space and the mainstream financial system become stronger over time. And past crises have demonstrated that financial instability can inflict enduring harm on the most vulnerable. And so to address these challenges, the Financial Stability Oversight Council has called on US regulatory agencies to enforce their existing authorities and work together to address regulatory arbitrage. Additionally, while large parts of the digital asset ecosystem really are already covered by existing US regulatory structure, the Council's called on Congress to pass legislation giving financial regulators additional powers to regulate digital asset markets where there are gaps, including via comprehensive federal prudential framework for stablecoin issuers. Third, across the government, we're working to combat bad actors who are exploiting digital assets to launder illicit proceeds, finance terrorism, and the proliferations of weapons of mass destruction, and to conduct a wide array of other crimes. This includes monitoring the development of the digital asset sector, exposing and disrupting nefarious actors, and strengthening anti-money laundering supervision. And then last but not least, we're collaborating closely with our allies and partners around the world on digital assets. Past financial crises have taught us that risks from inadequate regulation rarely respect national boundaries. In fact, the challenge is almost certainly greater in this digital asset space, where companies can be essentially stateless, and the fact that consumers can interact with companies across borders without actually recognizing that they are perhaps leaving the protections from one jurisdiction when they enter another jurisdiction. In some of the more notable recent crypto crises, the firms were deliberately operating outside the US regulatory ecosystem, highlighting how important this collaboration is. And so we've been working through the Financial Stability Board and other international standard setting bodies to develop strong, clear, durable international guidelines on digital assets. And the FSB's proposed framework for the regulation and supervision of global stablecoin arrangements and crypto asset activities and markets, which it published in October, is a big first step in reducing the threat that digital assets could pose to the global financial stability. We're continuing to engage with countries on the front lines, experiencing the opportunities and the risks that digital assets present, and we can learn from their experiences and provide support in the face of new challenges that they encounter. And of course, we enjoy very strong relationship in this area with our European colleagues. I'd like to congratulate them on bringing to the finish line the markets in crypto assets legislation, which will bring comprehensive regulation for digital assets to the European Union. And I'm excited to work closely with my European colleagues over this year at the Financial Stability Board as we finalize recommendations on a global baseline for comprehensive regulation on digital assets, which will serve as a guide to jurisdictions as they work to implement new digital asset rules. Now, let me turn to payments. Today, traditional finance quite simply just leaves too many behind. Roughly 7 million Americans have no bank account, and another 24 million Americans rely on costly non-bank services like check cashing or money orders or things like that, just for everyday needs. For those who do use banks, paying with traditional financial infrastructure can be costly and slow. And particularly, that's true for cross-border payments. So we don't have financial services that are affordable and accessible to all, and that's something we need to change. And with this urgent responsibility in mind, Treasury last year published a report on the future of money and payments that lays out steps towards achieving this vision. The report recommends that we encourage the use of instant payment systems, establish a federal network for payment regulation, and prioritize efforts to improve cross-border payments. It also calls on us to advance our work on possible US central bank digital currency, or CBDC, in case one is determined to be in the national interest. So now on that front, while no decision has been made on whether to issue a US CBDC, we're building capacity to support one and considering important design choices that would maximize any kind of potential benefits, such as improving financial inclusion and equity, fostering further technological innovation, and facilitating more efficient cross-border transactions and combating illicit finance as well, all the while minimizing risks. As the stewards of the global reserve currency, any exploration or technical experimentation with the US dollar should be careful and deliberate. Whether or not we ultimately issue a CBDC in the United States, we're committed to working with our partners around the world on international dimensions of payments innovations, including CBDCs. It's critical that we establish clear standards so that the payment systems of tomorrow, whatever they may be, develop in line with critical values like the rule of law and sound economic governance. We cannot let new forms of money become a tool for surveilling everyday transactions, threatening human rights, and repressing dissidents. And at the same time, we need to prevent digital payments from becoming a tool for money laundering or terrorism financing. Our traditional system architecture has many safeguards built into it. And as the payment systems of tomorrow develop, we need to make sure necessary safeguards can develop right alongside it. We're also deeply engaged in work to improve cross-border payments by building upon existing systems. The cost and speed of our current system places an unnecessary burden on the roughly 1 billion people who send and receive remittances. And it can dampen cross-border economic activity, in particular for small businesses where the costs can be more acute. And so to make real progress on this issue, we have our work cut out for us in 2023. At the G20, we are committed to moving full speed ahead on our core priorities under the roadmap for enhancing cross-border payments. At the G7, we'll continue to shape a shared positive vision for the future of the payment system. And we'll continue strong bilateral exchanges like the US-EU Financial Regulatory Forum I mentioned earlier. So finally, I want to turn to operational resilience, including cybersecurity and securing our critical infrastructure. The European Union has recently passed a Digital Operational Resilience Act, which overhauls the EU cybersecurity framework to meet the challenges of the modern era. Its goal is to protect people's sensitive data, keeping our infrastructure resilient to malicious activity. And these are vexing problems for any regulator, and they face both governments and companies. A hostile actor can make thousands of attempts to find the right backdoor, and they only need to be right that one time to get in. Whereas we have to be right every time. And that's something that governments really can't do alone. Securing the financial sector must be done in partnership with companies who operate most of the financial sector's critical infrastructure. It's been our priority to improve information sharing between public and private sector over the last year. And these aren't empty words. When an adversary launched multiple attacks on Treasury, we quickly alerted our private financial institution counterparts so that when that bad actor turned their attention to the financial institutions a few days later, these institutions were prepared. The same is true in the international space. The G7 Cyber Expert Group, as well as Treasury's bilateral relationships with many of the authorities attending this conference have been essential in keeping our financial system secure in this heightened threat environment. We're also looking to the horizon. Cloud computing is no longer an emerging technology, and the debate is often not if financial institutions should use cloud services, but how they should use them. And we've spent the last year assessing cloud services and at long last released a public report on our findings. Today, many companies use the cloud for a variety of functions, from communications to risk management. But in the future, more components of our financial infrastructure, like trading and payment systems, may migrate to the cloud. And there could be good reason for that. There are key potential benefits, including from enhanced security and resilience. In fact, Treasury itself relies on cloud services, and capabilities that accompany cloud adoption could help achieve the G20's objectives to make cross-border payments faster, cheaper, and fairer. But we recognize the challenges this brings, such as the complexity of the cloud environment, the staffing needs to design and manage cloud services, and uneven or insufficient transparency on the risks that are involved. We're committed to working with the private sector to address these challenges, and because the cloud is a global technology, we should avoid any kind of international regulatory fragmentation that could make cloud services less secure and resilient. We've started initial conversations with our like-minded counterparts, including our friends in the EU, and we hope that there'll be further progress in the coming months and years. So, as I hope I've demonstrated, our approach to financial innovation directly affects many of the core issues and central to financial stability, economic growth, and the values of democratic societies. Regulation shapes who is included in the financial system and how they're treated. Our approach to regulating financial innovation can also go a long way towards fostering societies that are open and transparent. So as we work towards these goals, it's critical that we harness innovation to improve our financial infrastructure that is so critical to weathering the economic storms that we may face. The ability to channel funds to borrowers, make payments efficiently, and diversify savings allocations are crucial to the way our modern economy functions. And it is our goal as policymakers to enhance these capabilities. Whether it is digital assets, operational resilience, or cloud services, our financial system is entering a new era. Regulation already influences how the financial system operates, and regulation will shape how it evolves. To be successful in these efforts, we must continue to work together. We have an opportunity to demonstrate to the rest of the world the indisputable and inherent advantages that an economy and financial system built upon a foundation of shared values, a financial system that delivers prosperity. I've now been at the Treasury Department for roughly 6 months, and it has really been encouraging to see just how close a relationship we share with our European colleagues. We have a lot of work ahead to deliver on our shared mission, and I'm confident that we can get there together. Thank you.
Jay, thank you very much indeed for these words. And I wouldn't want to repeat anything you say, but I just would like to pick up on the importance of 2 or 3 things you said. One is the joint forum. I was there when it was still the financial services dialogue. We pushed for this over 20 years ago. It's been an important forum, and I'm happy that you're continuing that tradition, ensuring the close dialogue between both sides of the Atlantic. I think it's really good to hear about the global baseline. We talked to IOSCO yesterday, to the FSB earlier, about the importance of having international rules on things like cryptos or operational resilience, cybersecurity. As much as each jurisdiction can come up with a good idea, our markets are global, our institutions are global, and otherwise we just create a lot of fragmentation. It's really good to hear your strong support for that. Equally, I think for interoperability of CBDCs, I know everybody's working on their own vision of a CBDC, but all the benefits aren't reaped unless we can get really cross-border payments going, and that requires interoperability. So also a big thank you. And lastly, on operational resilience, you mentioned cloud operators. I was fascinated yesterday by an example that the biggest Ukrainian private bank went totally virtual within less than 10 working days onto the cloud, continuing to provide services to all of its customers in the Ukraine, but also outside the Ukraine, away from risks to its underlying physical infrastructure. And I think it shows how technology can contribute to operational resilience in as much as it can put us all at risk. It's been a real pleasure to listen to you. Thank you very much. Hopefully we see you in Europe soon. And as I say, we really appreciate that you took out the time today on what is effectively, I think, still the second day of the meeting of the forum to meet with us. Thank you.
Thank you for having me.
Thank you.